Good afternoon, and welcome to Winning Small Business Loyalty in the Age of Neobanks. In a market flooded with sleek fintechs and neobanks, community financial institutions face mounting pressure to modernize their approach to small business banking. Antiquated product packaging, rigid servicing models, and legacy technology have left many institutions vulnerable to disruption and increasingly invisible to the very customers they aim to serve. This webinar will unpack the strategic missteps that hinder growth and reveal actionable strategies for reclaiming relevance. We thank you for joining us. I'm Catherine Tracy, Director of Business Development at Bank Director. This webinar is brought to you by both Finex Tech and ebankIT. Launched in 2014, Finex Tech is a specialized resource connecting a highly influential audience of U.S. financial institution leaders with technology partners at the forefront of innovation. Finex Tech makes it easier for financial institutions and technology companies to work together through its exclusive in-person events, editorial content, and online Finex Tech Connect platform. ebankIT is a digital banking platform provider to community financial institutions, offering customizable, highly personalized, omni-channel solutions to retail, SMB, and large-scale commercial accounts. A strength lies in their ability to support business accounts with advanced self-service digital banking tools ranging from new account self-service onboarding, managing payments, establishing multi-layer controls, financial insights, and multi-entity banking. Before we begin, here are a few things to keep in mind. We encourage you to stay engaged throughout the webinar. If you have questions for the speakers, click the Q&A button on the right-hand side of your screen anytime during the presentation. Our speakers will address your questions from there. This presentation will be shared with all attendees within 24 hours via email. It will also be available on finextech.com. If you experience any technical difficulties, please use the Q&A button to let our team know and someone will assist you promptly. Finally, the opinions expressed in this webinar are those of the individual speaker only and do not necessarily reflect the opinions of the other speakers or of the entities with which the speakers are associated. On that note, let me share a little bit more about our speakers today. Pedro Azevedo is Chief Product Officer at ebankIT. Pedro has participated in numerous digital banking transformation initiatives worldwide, mainly in Europe and North America, and now his current focus is managing the ebankIT omnichannel digital banking product. As Chief Product Officer and former Head of Delivery at ebankIT, he is committed to fostering product evolution through the constant improvement of product development and management processes. Next, Paul Provenzano is Vice President of Market Development at ebankIT. Paul has over 25 years of experience in driving growth and innovation in digital banking, digital payments, and other innovative technologies in the financial market. Paul is leading the U.S. expansion of a successful and innovative Portuguese-based omnichannel digital banking software provider, ebankIT. His passion is working with financial institutions to design and implement digital transformation technologies and strategies that create business impact and drive customer engagement. And finally, Reese is Senior Solutions Engineer at ebankIT. Jerry has over 20 years of experience inside financial institutions, including 8 as head of digital banking for a $1.2 billion financial institution. He recently joined the ebankIT team, helping North American financial institutions move from fragmented systems to API-first omnichannel digital solutions. His expertise enables him to operate at the intersection of FI strategy and technical advisory, ensuring the highest level end user experience coupled with meaningful business impact to the financial institution. So with that, Paul, Pedro, and Jerry, please take it away.
Thank you, Catherine. It's good to be with you again this afternoon, and greetings to everyone that's joined us. Thank you for taking a little bit of time out of your afternoon to discuss a topic that really has become near and dear to our heart, and that is helping our clients, community financial institutions, win small business loyalty, especially in this kind of ultra competitive age with neobanks. And so we're going to start just by a quick level set, and then I'll invite my colleagues Pedro and Jerry into the conversation. But I think what's important to just level set on is how the competitive landscape has evolved, and really in just a few years, how neobanks have really come on the scene and are starting to get some attention and even start to make an impact in grabbing market share. And so I think, what's important and key to understand about the approach from a neobank standpoint is really the perspective of where they're starting. And that is a digital only organization, a digital only financial institution, if you will, that takes on the mindset, the attributes, characteristics of what you might see as a typical or more traditional e-commerce organization, like an Amazon, an Uber, a Netflix, or other digital only type of an organization. And so, at the core of what we're seeing is user experience is foundational for where the neobanks are placing a lot of their investment and a lot of their experience. And so when we look at the market, we take a broad look at it from both what the market is saying from research and insights. We also look at just general trends on adoption. But I think it's important, especially in light of more recent articles, research that's been done. There's been a lot of focus and emphasis placed on where the gap is and what the market reality is on why small business loyalty is really up for grabs. And so I'm not going to go through certainly all these statistics. As Catherine mentioned, these slides will be shared afterwards. But I do want to highlight just a couple that I think really point to what's driving the demand from small businesses. And that is, digital experience remains a driving force for small business owners. And so the ease of use, the ability to navigate and work through different situations in a very seamless way remains top of mind. And I think, the next area that I would highlight is just how important delivering that experience is to small business owners. And neobanks are delivering an experience that is much more advantageous. And we'll talk a little bit more through our conversation about some examples of that. But I think at the core of it, it's beyond traditional banking and gets more into financial insights. And then the last point that I want to make is just around how real the account switching threat is. And the final point there, the highlight from a JD Power survey is small business owners, do desire, if they have a relationship with a financial institution for both their personal and their business, they desire to have that relationship together. And so I think there's a lot of talk about deposit acquisition. Oftentimes, strategies are considered siloed, personal or retail versus a small business and or corporate. And I think there's an opportunity, and we'll talk about a bit more of how to bridge that gap. And so today's topic of conversation with Pedro and Jerry, will really center on three primary or fundamental themes. We want to talk a little bit just about the foundation and address, some of the basics that are eroding small business trust in some of the traditional relationships. Talk about the battleground and what's emerging as, new table stakes around the digital experience. And then finally, take a look forward on what does winning loyalty and ultimately small business primacy potentially look like. So with that said, I invite Jerry and Pedro into the conversation today. Super excited to have you guys apply. I think folks will be in for a treat given your wisdom, insights, and experience in the industry. So I appreciate you joining me. And so let's start, if you will, guys, let's start with kind of a high level, big picture question. And that is just, more generally speaking, what do you think or what do you see from where you sit? So Pedro, Chief Product Officer, really kind of looking globally at how to help support, our clients and the industry be more competitive. Jerry, as you sit alongside, financial institutions and help them really based on their client segments, draft and start to assemble strategies that meet their target markets. What do you see are just big picture themes of the competitive threats neobanks pose to community banks today? Pedro, let's start with you on that question.
Thank you, Paul, and greetings. So I think the biggest threat isn't necessarily the neobanks themselves. It's also what they've revealed in terms of the gaps that, from a product perspective, exist in what is often offered today by a lot of community banks in terms of business banking, which is essentially a collection of parts, accounts, payments, maybe treasury, and they are often sort of loosely connected. They're not so cohesive as when you find that offering from a neobank. So that has worked for a long time, but today, and even given the experience that users will have with other modern applications, even outside of banking, now it feels slow and fragmented compared to how it worked before. And so neobanks, I feel, will offer you quick onboarding. They will make sure that tools become available straight away after onboarding, that everything will work together cohesively, and in a way avoid business owners having to figure out how the bank works, how the bank is structured, right? The experience is all built around how they run their business rather than how the bank is structured. So I think there's a competitive threat in terms of what you might call expectation reset, because once customers experience that kind of speed and clarity and integration in terms of the tools, it becomes hard to justify friction elsewhere.
Awesome. Appreciate that. Jerry, what are your thoughts or observations on that question?
Great question, Paul. I appreciate it. So from my perspective, the neobank's biggest threat is speed, Paul. So its biggest threat is their speed, how fast they can move. And small businesses really feel that difference right away. So the neobanks offer that experience that just feels plain smoother. And because they're not weighed down by the old cores, fragmented partner vendor integrations, and the long release cycles, I think that really supports their speed to market. For example, a neobank can simply roll out an onboarding flow that's brand new or a fresh feature in just a few weeks, while it moved and roadmapped. So I think neobanks definitely compete through speed. And again, small businesses feel that. But they also recognize what's needed for a small business to get started and to get credit right out of the gate. So they've cut down a lot of paperwork, removed a lot of steps, and built that experience to help, as you mentioned earlier, it feel more like an Amazon level convenience. And this difference really stands out to the small business. And underneath it all is the architecture that supports the experience. So the new banks are building API first cloud native platforms so they can ship updates constantly, sometimes even daily, while community banks often need vendor tickets and vendor projects just to make small changes on their platform. So the thread here really, Paul, is I feel neobanks are better with speed, and they've stripped out basically all of the operational drag that allows everyone else to move not at the speed at which they do. So my thoughts.
Appreciate that perspective. I mean, I think what I hear from both of you, just different perspectives or different areas of focus, is the speed to market, the ability to deliver functionality, but then also to not get trapped into or necessarily pigeonholed into a banking framework, but more into being supported the way that their business needs to be supported. So appreciate that. Kind of continuing on that theme, if there was anything that you would add around, are there, additional attributes or additional points of the user experience or the small business experience that you think neobanks are doing extremely well, that you want to share with the group? Jerry, we'll turn it back over to you.
Sure. Yeah, they definitely focus on their experience, right? Everything connects cleanly, everything connects and moves quickly. So the whole experience feels more like a one unified platform to the small business user, without a bunch of these pieces and partners and vendor offerings stitched together. And honestly, the real magic here isn't the clean UI that they offer. Again, as I mentioned earlier, it's the clean ecosystem underneath that supports the payments, the onboarding, the lending, the invoicing, because they all share that same data integration. And with that API first cloud native stack, they're able to take advantage of that architecture. So, for example, when a small business, does something in one part of the platform in this scenario, the rest of the system already knows what's going on and has that data at its fingertips to be able to use and personalize and make that experience the best it can be. So community banks try to recreate this with multiple vendors. They'll try to bring it in to the current core and the current architecture they have, but they really need to focus on aligning that architecture with those integrations. And what that will do is it'll result in a better experience for the small business member, for the small business customer. That way, it'll remove, if they focus on the architecture, it will remove the fragmentation feeling that their small business customers are experiencing today. And again, the neobanks, they also integrate seamlessly with tools that the small business customers use today, right? Stripe and Square, QuickBooks and Shopify. There's no batch files, there's no mismatched data, no rekeying of data. So this means that there are fewer errors, and this delays the business effort, and it also removes headaches for the bank. So because of that, again, Paul, I think it's the stack that needs addressed in order to equate to that speed to market.
Yeah, no, that's a really good point. And so, Pedro, when you think of it from a product positioning standpoint, what's your view on what the neobanks are doing well from a small business experience standpoint?
Yeah, Paul, I mean, coming from a product point of view, and Jerry already mentioned the unified experience, I think that's spot on because the focus on usability from neobanks is very intentional. They will assume that the customer is going to be busy, is going to be on the move, probably non-technical, doesn't want to read, a lot of instructions. So every interaction will be designed to be obvious, to be fast, to feel familiar from compared to other apps that they will use on an everyday basis. So that's all key to having this really world-class experience in place. And also they will bundle all this together in terms of invoicing and payments and cards and everything all in one place, potentially even giving you access also to your personal accounts using the same interface as you're seeing your small business. And so that's powerful because it reduces cognitive load, I would say, for the business owner. And in addition to that, what I've observed is that they typically won't lead with banking products exactly so much as with value in terms of giving you tools rather than, here's another type of checking account, giving you tools to manage your money, to get paid, to pay others in a way that really works extremely well on a day-to-day basis.
Yeah, no, I appreciate the perspective from both of you. I mean, what I hear in that is what the neobanks are doing really well is they're designing more around the business operations as opposed to banking products and services, and extending that even further to be the digital front door for extended services. I think, as Pedro, as you mentioned, and Jerry even alluded to, extending to invoicing, receivables, payables, and other tools is fundamental to the way that they look at that. So appreciate your perspective. So let's shift a little bit more now back toward the community bank perspective. And so, in your view, what thoughts would you offer community banks on differentiating just beyond digital features? Are there areas that a community bank can differentiate themselves in the market from the neobanks? Pedro, let's start with you.
I think that's a great question because there's certainly a lot to explore in terms of what the community banks can offer outside of features. Because, as you say, I mean, features alone, they won't be enough, right? Everyone will eventually catch up on whatever feature is the differentiator today. It won't be differentiating you forever. So there's got to be something beyond that as well that you explore. And certainly, I think there's plenty of potential in community banks in that regards. And if I had to, pick one aspect of where they can differentiate beyond features is in terms of advisory and having experiences that are somehow advisory driven. in the sense that you have digital tools that can surface insights, not just provide you with transactions, and help customers understand what's happening with their business, and what might be the next best action. That's something that comes from the experience of working with these businesses, something that's, I think, difficult to replicate in a digital only scenario. And there's further to that, also, I believe, a big opportunity in terms of having industry specific offerings, because if you're dealing with a restaurant or a contractor or some other type of business, they're not necessarily going to have the same needs in terms of guidance, in terms of that advisory. And again, that's, I think, difficult to get right at the digital level, and a great opportunity for community banks to differentiate. And so when your products reflect that reality of the everyday needs of these different types of businesses, I think the experience then becomes a lot more relevant. And so I think for a community bank to really win, they won't just have to be easy to use and well polished and all the other things that we've been saying, but also genuinely helpful. So that's, I think, much harder to copy than whatever new feature you've just launched.
Right. No,
Yeah,
that's
and
a
I
really
agree.
great point. I mean, yeah, go ahead, Jerry, please.
Yeah, I was just going to agree with Pedro and his mention on it's not about more digital features. And I think that's the low-hanging fruit that every financial institution really feels they can grab and knock out of the park. And in this scenario, I agree with Pedro. I don't think that's what it is. And along the same lines of what he was mentioning about advisory services and bringing those advisory services into the bank, I think as well, it's about making every bank smarter and more the data that commercial bank has, the neobank doesn't, to personalize every feeling so it's not generic. So, it also allows that commercial bank to implement predictive analysis, right? And to see things proactively. If, let's say, for example, if this was in place and there's a solution with predictive, they cash flow is tight for when payment volumes shift, or a business might need a line of credit increase, and they can be proactive, right? Show up before the problem happens. And that's really when the true partnership is transparent, I feel, to the small business. So again, on top of just to underscore what Pedro mentioned, I agree. I don't feel additional features are where community banks can differentiate from neobanks, but saying with that they can differentiate with the data they already have.
Yeah, no, I think you guys are making some great points, and you think about really, I like Pedro. I like your point that not all businesses are the same. A two-person lawn mowing business is much different than a 20-person restaurant. That's different than a 10-person interior design firm, and so their needs, their requirements, expectations are all very different. So, and I think that's interesting because you start to see the evolution of certain neobanks that now are becoming focused on business segments, whether it's the medical profession group, whether it's the gig economy. But we're starting to see a more focused approach to serve common set of requirements, a common set of needs that particular businesses have. So I think that's really good insights on focusing or positioning beyond the banking products and services, but more on what the businesses are trying to solve for. So I appreciate your insight on that, guys. So we could continue on that theme on are there other elements that one of the statistics and the market insights are really focused on. You look at the different research firms, JD Power, and some of the others, they're putting a lot of focus around the propensity for small businesses to switch accounts. I mean, that's not an easy process. There has to be something that's just fundamentally missing in order for a small business owner to take a break in their day-to-day activities. And so, in your observations or view, are there points of friction that we haven't talked about yet, or specific um, uh, requirements you think businesses are looking for that is increasing the propensity for them to switch from a traditional community bank to a neobank? Pedro, we'll start with you.
Yeah, so Paul, as I alluded to a while ago, I think there's just less tolerance for friction once these small businesses have become accustomed to modern apps and to how even other modern software like accounting or payroll or e-commerce, like Sarah was mentioning before with Amazon, etc., how they work. There's a lot less tolerance for friction on their everyday dealings, and having to go through delays caused by convoluted workflows at the bank or manual steps or limited visibility into what's happening with their application or what have you. That's there's not a lot of tolerance for that anymore, and I think with how easy it is to onboard again, as I mentioned, into a neobank and give that a try and play around with what they have to offer, the risk is greatly, I think, diminished by all of those elements. And when what a small business is asking for is essentially, help me with my cash position, with my money movement, and help me one thing I haven't mentioned before is helping me as a business owner have self-service capabilities. Manage things by myself when I want to without having to depend on the bank. When these things are fulfilled by a competitor that makes it so easy to onboard and give things a try, and they deliver this real-time cash flow visibility, these instant payments, they give them strong self-service on the go, with a modern feel and responsiveness. I think switching then becomes a lot less of a risk, and that loyalty today, I think, comes from that everyday usefulness that needs to be there all the time.
Okay. And Jerry, what would you be your thoughts or observations on that?
Yeah, 100% match the pace that these small businesses are running their business, right? So they're feeling this in three big ways in my mind. So manually processing, right? So they have to manually process specific items, right? At night they might do cash flow after dinner with the family. They're doing paper forms. They're doing multi-day reviews on some of their submissions. And this just doesn't work anymore in the era of neobanks, because neobanks are removing all of these steps. And in contrast, the consumer bank is seeing these are obvious, needed experiences that I must have for my bank or for my small business successful. So the inconsistent data, right? So if a small business is partnering with a consumer bank that still operates across disconnected systems, the small business ends up entering the same information over and over and over again for specific forms or night jobs that they have to run for payroll, et cetera. And the neobanks avoid this, right, with unified API-driven data integrations. And then lastly, small businesses expect everything in real time: balances, payments, alerts, and all of the decisioning on their transactions. So when a neobank can open an account or issue a card instantly to the small business, anything else slower feels out of date. So I 100% agree with what Pedro's already mentioned, Paul, and that is, small businesses aren't switching because they're not switching to a different provider because they're disloyal. They're switching providers because their business is running faster than their bank is, and they need to find a better option.
Yeah, I think that's a really interesting point. I mean, you think about, small businesses are during the course of the day running their business. And it's in the evenings, it's on the weekends when they're taking care of, other banking needs or accounting requirements that may not align with traditional bank's hours. So it needs to be efficient and give them the information in a real time fashion that they're looking for. So appreciate the observations on that. But I would say all is not lost, right? I mean, there are certainly the community banks have a strong place in the communities they serve. And so when we start to let's transition the conversation a little bit on now, strategies and opportunities for community banks to really start to offer competitive and compelling solutions to the market. So let's just start with Pedro. Where do you think community banks still have kind of that natural advantage and how they can leverage it in the communities and markets they serve?
So, Paul, I mentioned before the advisory factor here. I think that's key. I mean, community banks, they still have this huge advantage in terms of context, in terms of trusts that they've established. They understand their local markets, they understand the regional industries, they know the real stories behind the financials. And so all of that, I think, all that matters, especially if you're talking about something like lending and those more complex kinds of processes, for sure. And the opportunity, I believe, is to pair that human insight with strong digital experiences, unified experiences, like Jeff said. That's really key. I think letting digital handle speed and convenience for you, but then still having people focusing on advice and judgment. That's a blend that can be as efficient as it is personal, and difficult to replicate, as I mentioned, in terms of something that's purely digital. So certainly still a natural advantage there for community banks in terms of that context, that trust again that they possess.
Yeah, really good thoughts. Jerry, any contributing thoughts to that?
Yeah, totally. Yeah, small businesses, when it comes to serving banks, definitely have some real advantages here over neobanks. So, number one, and I mentioned data already today, but they sit on so much rich customer data, right? This gives them context that the neobanks will never have. They see the customer's whole financial life, their personal side, their business side, their cash flow patterns, right? Credit history, all in one data place. And then secondly, the community banks can blend digital and human in a way that actually matches how small businesses operate today. So small businesses don't want everything automated, but they do want what they want is the right mix of automation at the right moment. So much like risk and multi-factor authentication and a login process for digital, they accept the right amount of mix of human and digital at the right moment. And a banker who knows that local market and understands the owner's story personally can step in where a neobank simply can't. So the community banks can serve the full relationship where really, Paul, a neobank can't. That human experience, that human layer that the community bank has over the neobank can definitely help them take a natural advantage to serving their small business area.
Yeah, I think from what both of you guys said, I think there's an opportunity to blend both the existing relationship. Technology is not does not distract or replace the human relationship, but certainly can enhance the human side of it. So that blend of both technology and then the relationship through relationship bankers or an extension of that, certainly is an advantage that the community banks have in the market. One of the attributes of a neobank, again, as a digital only, one of the things that they've solved for pretty well is that account opening onboarding experience, because all they have, the only way to do that is digital, which often is the first impression. And, oftentimes a small business owner will start the process. And if it feels like it's inefficient, cumbersome, or whatever it might be will be abandoned, and that could be the lasting impression that they have of that particular entity or organization. So when you think about initiating or starting that relationship in a digital only or digital first perspective, are there any specific attributes that come to mind that you feel would be important for the group to think through relative to small business account opening and onboarding? Pedro, we'll start with you.
Yeah, Paul, absolutely. I mean, it's clear that any modern onboarding experience has to be, smooth and effortless and low friction. But that's, what goes into actually making that happen. That's the real discussion, I guess. Jerry already mentioned that whole, redundant entry of data that you've already entered elsewhere, and you have to be able to minimize redundant input coming into the system. That's definitely one part of it, but it's not just the guiding through the data entry that has to be minimal, and have clear steps and a clear sequence that is going to be followed with no guesswork about what's the next step or what's happening. But it's also what happens after you submit that, let's say, that application to become a member or a customer. So once you click submit, there's essentially visibility into what's happening at the bank, what's happening with your process, where is it currently, what's needed from you, or what's left in the process before it's finished and approved, and then how quickly can this happen. But also, key to everything, I think, is what happens after approval. Are you able to immediately do something useful, send a payment, get a card, maybe a virtual card, see your cash flow? Because onboarding isn't, it shouldn't be seen as just a single event. You have to optimize for data entry. You have to optimize for approval and the visibility of that approval. But then it's also the start of it's like an activation. It's the start of your relationship with this customer. So you need to immediately build confidence that you're going to provide value right away.
Yep. No, that's a really good point. And I think that reinforces the importance of leveraging data through that workflow. Jerry, any other observations on your perspective?
Yeah, 100%. So to make the workflow Pedro just outlined possible, it comes down to the architecture and how it works together. So just kind of re-emphasizing what I initially started sharing at the beginning of the webinar is it's all about the architecture. So the real-time connectivity to the core and the identity systems, all of that data needs to move instantly and not be batched, so that your KYC, your business checks, all of that happens inside the flow of the onboarding. And secondly, that orchestration layer needs to quietly coordinate every step, by routing the data, traces, handling the exceptions, and keeping the customer moving forward so that the experience feels more, as we mentioned, like an Amazon one clean journey instead of these 5 disconnected systems through a disparate system. Yeah. And then lastly would be the configurable workflows, right? To help keep the human focused on true exceptions. So straight through the processing. So this straight through processing, Paul, really becomes default in the experience eyes of the small business. So what this means is that in the banks.
I think you're just cut out on
Can
us,
you hear
Jerry.
me?
No problem. We'll continue.
So in third, the configurable
on. And so
flows.
We'll continue on. Just a closing question or two as we leave community banks with just a couple of practical thoughts on how to navigate and forward. And so what would you say, Pedro, when you think about how should community banks think about redefining relationship banking in a world where, small businesses are starting to, and even sometimes approaching it as a digital first, even though they may be in the same town, the same community, but the approach is digital first. What would you say are some aspects or some things that community banks could think about to enhance that relationship banking?
Yeah, great question. I think there's an opportunity to evolve relationship banking here, especially with certain aspects of the rise of AI of late, of artificial intelligence. Certainly, many threats will come from there, and we could have a whole webinar around that. But certain opportunities for sure will also arise, and staying relevant, and not losing that relevance in the daily life of small businesses will have a lot to do, I think, with evolving that kind of relationship banking, that kind of advisory that's taking place every day. And my view is that you're not presenting static products anymore, like just passive kind of information, and you're becoming much more proactive, much more continuous in your interaction, more insight driven, presenting, trying to anticipate needs, trying to surface guidance, making it easy to act upon that guidance. And yeah, that maybe sometimes that happens digitally, maybe sometimes that happens with a human. And that's something that AI can, I believe, help with, analyzing those patterns, analyzing those insights, or surfacing those insights, and just making sure that you continue to build on trust and value in those relationships while delivering them, in a more optimized manner, more intelligently, I would say more continuously, is key here.
Well, good thoughts. Gary, do we have you back?
Yeah, I think we're good. Can you hear me okay?
Do you have a response to that or thought on that question?
Yeah, so I do. I appreciate it, and I apologize for the technical challenges here. But I feel that, again, the modern financial relationship isn't about how often someone comes into the branch or calls the contact center. It's really how well the bank understands the world. So again, when we're unifying retail and digital, or when we're unifying retail and business data into one profile in digital, you can recognize patterns, as I noted. So why this is important is it allows the financial institution to anticipate needs. So it allows us to show up with guidance at the exact moment that it matters. And again, this kind of touches on what Pedro was mentioning: the digital approach versus when it's simple, with a human when it's important. Other folks with this approach can leverage digital channels to handle routine, human channels to handle the nuance. And that's why this shift is important, and why it matters, and why we need to have conversations like this. Small businesses want speed and clarity, but they also want a partner who understands their full financial picture. And I think community banks can deliver that blend.
Yeah, no, those are really good points. And I think that as you just highlighted, the visibility in a proactive way. I like, Pedro, what's a technology conversation without sprinkling in a little AI, certainly, but there certainly will be a place for AI to help provide some financial insights, not in an overt way, or a way that takes over or replaces a relationship banker, but certainly provides another layer of insights on a very, very timely manner when it means most. And so let's close the conversation out, and then we'll see what questions have come in through the forum here. But if you were to, encourage community banks to prioritize, anything over the next 12 to 18 months, in the area of winning small business loyalty, what would you say or encourage would be something that they should think about? Pedro, let's start with you.
Well, that's a big one, Paul. I think there's certainly with AI, as you mentioned, there's the opportunity for having a powerful new tool in the hands of that relationship banker that needs to be fully leveraged, I believe. And again, with the emergence of AI, what you're seeing now is there is an increased risk of becoming the bank becoming something that just exists in the background, but is not where the experience is taking place, where the decisions are happening. Because now you interact with your personal assistant that happens to be a chatbot, and it's going to increasingly start to interact with all sorts of applications, websites, and banks. Eventually, they will all expose an MCP server or whatever other kind of technical solution comes up, and the chatbots will interact with it. The generative AI will interact with it and place another layer between yourselves and the end customer. So you have to look for ways how you can own that experience layer, how you can keep valuing your experience layer, and at the same time, small businesses won't want to assemble their own banking stack. They will want clear bundles that can grow with their business. And so, if on that experience layer you're able to set up tiered offerings, embedded services, even subscription style models, something that your customer, even as an individual, might not particularly be a fan of in terms of subscription models, but for their business and for growing and adapting. I mean, with their to their business evolution, it can make a lot of sense. So having that kind of flexibility and having that kind of clarity for the next while will position the bank much better. And owning that experience layer will be very, very important, I believe.
Yeah, that's a really interesting perspective. I think we've talked a lot today about the technology front, but there's a whole nother opportunity to think about how the product and service are repackaged. And so the question becomes: are financial or are small businesses shopping for products in a way that are different in the way the community banks are packaging them? Meaning, traditionally, it's based on number of the amount of balance, number of transactions of a certain type, where small businesses may be shopping for additional electronic tools that will help their business be more efficient and effective. So I really appreciate that. That's really outside of the technology stack altogether. It really kind of just talks about how a community bank can position products and services that speak more toward the small business, and then layering in the technology behind that. Jerry, any other thoughts on any encouragement for community banks to prioritize over the next 12 to 18 months?
Yeah, just more emphasis on architecture. Maybe some considerations. From a API first approach, allowing the bank to kind of break free the legacy core and controlled release cycles, right? So with every new capability such as payments, RTP, FedNow, onboarding, lending, treasury, all of these that are in the minds of the small business owner, these need to plug into a consistent API layer. That way the bank can add or replace components without rewriting the entire stack. Speed to market. It also means integration becomes more predictable, right? So instead of custom one-offs, the small business can translate that into a cleaner workflow, fewer hands-on, fewer data replication that the bank should already have, and more unified experience for the small business. And then this allows, again, more event-driven data. So every digital experience will feel more forward-facing. And then lastly, we all know the core isn't going away, right? But it also can't be the center of innovation anymore. So community banks need to understand that, and they need to come up with a modular platform that sits above the core, allowing them to handle orchestration, workflows, and integrations into those third-party APIs like payments that we've already discussed. So high-level recap: small businesses are choosing providers, I feel, Paul, based on speed integration and that real-time visibility. And then without the API first event driven module foundation, these community banks can't deliver the experiences no matter how strong their local relationships are. So to me, in the next 12 to 18 months, they're really about building the architecture that leads the community bank to compete on pace and not just the neobank.
Yeah. No, really appreciate you guys sharing your perspectives today. So thank you for joining the discussion. What we had hoped to achieve today was to highlight, first of all, what are some of the key attributes that are driving the success in the small business adoption or transition to the neobank world. And I think, hopefully what you heard today, something they're getting right is digital first from an experience standpoint and incorporating many of those experiences that we've all become used to outside of the financial institution or financial service world. But there certainly is an opportunity and strengths that community banks have in the market, largely centered around brand awareness, the relationships that are in place, and there certainly is an opportunity for community banks to prevail and to be to create a winning strategy in this very important market segment. So we're grateful for your joining us today. Catherine, I'll turn it over to you to see what questions may have come in through the chat. So thank you, everybody.
Thank you, Paul, Pedro, and Jerry, for the conversation. And thanks to the audience for sticking with us. I know we've had some technical difficulties, but I think we've sorted it out here now. We do have a couple of questions that have come in from the audience, but I just want to send a reminder. We do have a few more minutes left. So to the audience, if you have questions and you haven't submitted them yet, go ahead and do that. Now is your time. So I'll go ahead and tee these up, but please submit any that you may have. Paul, I believe this would be directed towards you. Should a community bank be trying to reestablish themselves into the market? Where do you suggest is a good starting point?
Yeah, no, I appreciate that. And I think just kind of picking up where my closing comment, I think product positioning is extremely important. I think getting away from a product strategy that is traditionally bank oriented, meaning transaction based or balance based, and starting a product positioning strategy that is either around particular business segments or could be based on particular company sizes, but a product positioning that is more geared around what problems and then solutions the bank is solving for small businesses. So an example is packaging the ability for small businesses not only to have integration with Quicken, which is kind of the low-hanging fruit, but start to enable invoicing services as an example, or for a larger company, extending some type of, as Pedro mentioned, maybe there's some advisory services or even HR payroll, receivable. So really starting to package products or services and capabilities that are beyond traditional banking, and then in such a way, and I think Pedro even alluded to it, considering a subscription-based model. If you look at today's small businesses, maybe subscribing to a Quicken, they may be paying for services to an HR payroll system. They may be subscribing to a variety of different technology services. It could open the door for a subscription-based model, assuming that there's enough value for the small business. So I think that's an opportunity for financial institutions, community banks to really think about how they reposition and repackage just their product and service in the market, even before they get to the technology or the infrastructure side.
Yeah, thank you. Very good. Another one, and Pedro, this is product specific, so I'm going to direct this one towards you. From a product perspective, where do you see the biggest gap between what SMBs say they need and what most community financial institutions are actually delivering today?
So that goes, I think, back to my initial observations and also what Jerry mentioned at several points, that there is a lack of cohesiveness in the overall experience that is provided today. in many of those apps compared to what neobanks offer, which is designed from the ground up as an integrated experience where everything fits together. All of the features are designed to work with each other. The bank structure is not apparent to the small business owner who does not need to understand how the bank is divided and structured and how it operates. And I think that's the main gap that you see today. And as a result, you get processes that are much more complex for everything around onboarding to other types of not every day in terms of onboarding, but other everyday activities that also become more cumbersome. And that's all derived from that lack of, I think, cohesiveness that's at the start of everything.
Okay. Thank you, guys. That's it for the questions that were submitted today. Paul, Pedro, Jerry, any last minute thoughts to leave our audience with before we close out today?
No, just we're grateful again for everybody joining us this afternoon to kind of dig into a really hot and compelling topic around winning small business strategies. And, we look forward to continuing the conversation. So thank you again, Catherine, and the Bank Director and Phoenix Tech for hosting this webinar.
All right. And with that, as a reminder to our audience, you will receive the recorded version of this webinar within the next 24 hours. And we will also post the webinar on finextech.com. Thanks again to Paul, Pedro, Jerry, and ebankIT for co-hosting today's webinar. And thank you, the audience, for joining us today. Have a great rest of your day.